What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis on some of the tickers I watch with liquid options chains. On the left here, you'll see we have the broad market, which is comprised of SPY, the Qs, and IWM. And after that, a couple companies to watch. We have Apple, Netflix, Tesla, Alibaba, Facebook, and NVDA. If you'd like to see me add anything to the watch list, let me know down below in the comments section or shoot me an email. So jumping right in with SPY, if we're zoomed out a little bit, we can see a bullish pattern starting to emerge, and that would be an inverse head and shoulders where we have shoulder number one forming here, a lower low forming, which would be our head, and the potential and possibility for another shoulder to be formed somewhere in this area now that we're pulling back off of this high here at 281.22 just about. So what could happen to see a bullish pattern sort of build would be some more consolidation like this to happen underneath the 200-day SMA or just in this general range before SPY makes a move higher. And the buy on that for a longer-term investor would be the break of the neckline, which is this level here at 281 just about. So something to keep in mind on a longer time frame, but let's just zoom in and talk about more recent price history. So SPY had a red week. You can see Monday was pretty brutal, but getting bought back up in the afternoon didn't really push the price much lower than this prior week's sort of consolidation range. And then the real red started to happen in the latter part of the week where we had Tuesday, Wednesday, Thursday, making lower lows each time. And then this green candle here looks more like short covering. If you watch Shadow Trader's video, he'll talk more in depth on the market profile and what that looks like there. But again, not being able to reclaim the 200-day SMA. So we could find resistance there and move lower in the coming week. If we do, I would imagine we could pull back to this level, 270, and then anything after that is going to be 267 just about, and this is coming from our highs here, and the 50-day simple moving average is sitting right there. Not to say that it's obviously going to keep moving as the week goes on, but that will offer some sort of support. You can see here offering a little bit of resistance around that level, and then on the back test, support, and then a move higher. So something to keep an eye on is the 50-day SMA. And then if we do our fibs again, we can see we haven't really made the pullback that we really need. 38.2 is still pretty far away down here at 263.50 just about. The 50-day SMA is obviously now moved higher and will offer support before we get to that level, but something to keep in mind there on SPY. Next up, if we look at the VIX, we were talking about how when the VIX is sort of in between the levels of 9 and 15, the market just kind of grinds higher. If you look in the past history, this is where it's sort of steady. But what happened in the past week is the VIX started to come down below 15, and then as the selling picked up, the VIX pushed back up and is now above that level. So a little bit more fear in the market right now than there was last week. Just something to keep an eye on if we do start to make lower lows, higher lows. Just overall general fear is a good thing to gauge in the market. Okay, so the Qs, similar to SPY, I could certainly see that same inverse head and shoulders pattern forming. We have a shoulder, a head, and then again, if we consolidate around this range, definitely some more shoulder 2 action, if you will, and then a move higher is definitely possible. One thing to keep in mind here is we are a little bit further away from that 200 SMA. Again, not being able to get bought back up into yesterday's range or Thursday's range on Friday would signal that this could, again, just be a little bit of short covering and the market wants to move lower, as this isn't really new buyers stepping into the market. Again, our targets would be the 50 SMA here, which is coinciding nicely with this couple highs here. But obviously, again, that will move as the time goes on. Anything more than that, if we draw our fibs again, our 38.2 is much lower than the 50 now at 163, so keep that level in mind as well. IWM is certainly an interesting one. The Russell acting as a leader in the past couple of moves here in the market. We can see how much more aggressive the selling was here on IWM as compared to SPY and the Qs. Just showing how thick this resistance level is up here. We had the 200, this double price level, and also this descending resistance trend line drawn in, all forming what looked to be some pretty aggressive selling here. This support line, now that we're above it, acted as a good place for the price to stop there on Wednesday. However, now that we're below it, I think the 50 SMA, again, would be a good target, again, coinciding with these highs here. Looks like the market as a whole still needs to pull back a little more, and this is just the start of it. All right, so starting with our companies here, we have Apple. We had this symmetrical triangle sort of being built here, which is no longer relevant as our resistance became 276 just about. So we can get rid of that, clean up the chart a little bit. But what we did see is this quick snap over that 276 level, quickly getting beaten down by our resistance there, forming this pretty interesting doji here on the daily. From there, obviously, the market took Apple a little bit lower, but what's cool to see here is that on Friday, our price did get into Thursday's range, which is showing a little bit of strength there. If it was just short covering, I'm sure not many people would want to be covering past the close of Thursday. So a little bit of strength here compared to the market in Apple. I could certainly see a retest of this super resistance now that the trend lines are sort of coinciding there at 276. If that does get a break, again, our target is still up here at 185.50 just about. But if that does decide to give, then it looks like we're headed back down to test out 268. Anything after that, we're talking down here at 160.50 or the 50 SMA to act as a little support on the way down there. So that's Apple. Netflix, again, falling out of its rising wedge. You can see over the course of the week, a little interesting, we had, again, the selling on Monday really pushed Netflix down, but then it actually showed a little bit of strength Tuesday, Wednesday, before sort of gapping down to the 200 SMA and 50 SMA here on Friday, and then finding a little support. So it does look like the 200 and the 50 are going to act as support. I'd like to see a push back up to this level around 366 just about. If it doesn't happen that way, let's say we just fill this little gap here that's left to be filled on Netflix, and then we reverse, a break of the 250 would be sort of catastrophic and send Netflix, I'd imagine, back down to the lows here at 318.69. Anything lower than that is some prior supports down here at 310 and then 300. Tesla falling out of its symmetrical triangle. Not too surprising, given that they just had that big announcement. They're closing stores. Doesn't really seem like a good business model, I guess, to some. But it's consolidating right here around the low of this point here. I could definitely see this consolidation leading to a lower low happening. You see, you make the big bearish move, you consolidate, and then you make the bearish move again, pushing Tesla all the way back down into this range around here, which is right around 250. So if we do make a move higher, though, we have our resistances drawn in. We have 288. And then 293, and then a back test of the support trend line would certainly be in store. But right now, it looks like Tesla wants to go lower. Alibaba getting a little gappy here, kind of reminding me of what was going on over here, where there was gaps all over the place. Right now, just gapping lower and lower, which is not really a good thing, leaving all these gaps behind. You can see that it got bought up on Friday, sending the price all the way back up, but not enough to fill the gap. So I could imagine that Baba would potentially want to fill the gap on Monday here to 176.75 just about, also the high of this candle, and then reversing back down to this level. Not too sure how this gap is going to play out. Is it going to fill? Who really knows? Hard to say there, but Baba was showing a lot of relative strength compared to the market, and then finally fell apart, it seems, here in the past week. So this would be an interesting to watch if we get back down into this level. Obviously, it'll get bought up, I would imagine, the 200 SMA along with the support zone. But if we fall lower, then we have our targets mapped out for us, 165. After that, the 50 SMA, and that would certainly be enough for a week's worth of price action on Baba. Facebook looks like a buy right now. You can see that we're forming this bottoming pattern, like a little cup and handle sort of thing. Our trigger point here, our buy point, would be anything over this level here at 172. If we can push back above 172, it looks like we would want to move higher. We did back off of the 200 SMA on the first attempt, if you were watching intraday on Monday, and then pierced through it, as I talked about in last week's video. So again, nice bottoming pattern here, a little cup and handle. So the trigger point, buy point, would be anything over 270 or 172 just about. And lastly, we have NVDA. NVDA pulled back into our 50 SMA and our price level there, as we talked about, and is starting to get bought up. It will be interesting to see whether or not this momentum from Friday carries on into Monday, and we see another attempt at this upper resistance trend line. If we do, and we get a break, I would imagine it could run to the next whole dollar, or a $10 mark there at 170. That's certainly a possibility. If it falls off of it, again, looking for the lower trend line on this one. Since we already came back down to this one, I would imagine it would want to go lower to the trend line, and that's NVIDIA. So those are some targets there. If we fall out of the symmetrical triangle, which is very possible due to all of this bearishness in the past here. If we fall out of it, again, let's just draw this price level in. I would target this price level first, 131 just about, and then after that, this one down here, right around 124. And those are some immediate targets. Anything after that is a little bit of a far shot. You'd have to go quite a ways back in history before you found some price action there. So that's NVIDIA. All right, that's going to do it for this week's episode of the Weekly Watchlist. I hope you could learn something. I hope I left you with a couple ideas for this coming week. With that, if you enjoyed the video, leave it a thumbs up. If you found it useful, have any questions, want to see me add anything to the watch list over here on the left, let me know down below in the comments section. And as always, subscribe if you'd like to see more of this content. And with that, I wish you a green trading week.